In only the last 7 days, I've spoken to 3 small businesses that are approaching the VAT threshold and are really, really worried about this. So let's take a look at what this actually means for small businesses and if there is a reason for you to be nervous or not. And I'll also give you my tips on how you can manage it in your business. So if you're interested in other videos like this, make sure that you subscribe to my channel down there on the right hand side and we can get going. So if you are a UK-based business and your turnover reaches £85,000, then you need to register for VAT. So there are a few exceptions to this, for example, financial services or insurance, and also some businesses where all of their sales will not be included in that 85,000, for example, maybe if you have overseas sales. But if you're a UK business and you're selling to UK customers, then a general rule is that £85,000, when your turnover reaches this, you do need to register for VAT. And when I say 12 months, it's any rolling 12-month period. So at the moment, we're in the month of July. So it would be from August last year to July this year. And every time you move on a month, that 12-month period moves with you. So it's a rolling 12-month period. It's not your financial year or calendar year or anything like that. Always the last 12 months you've traded for. So most small businesses get really nervous about approaching the VAT threshold. It's a really big milestone. £85,000 in a year is quite a lot. And for most people, when they start out in business, the dream was to turn over that amount of money. But actually doing it brings some challenges, some worries and some headaches too. So the current rate of VAT is 20% in the UK. So this means that if you're currently charging £100, then you should be charging 20% VAT on top of that. Now that's really straightforward if most of your customers are business, so you're B2B, business to business sales. Because if your customers are also businesses, then chances are they're VAT registered, and therefore you can just simply add the VAT onto your existing pricing, because pricing to customers is generally always spoken about before VAT is added. But if you are selling B2C, then this brings some more challenges with it, which we'll go on to a little bit in a second. So I want to give you an example of a plumber. So take a plumber that is not VAT registered at the moment. If they are charging £100 for their services, then all of that £100 goes into their business. But if they become VAT registered and they don't change their pricing, that £100 actually includes VAT. So out of that £100, they need to put aside £16.67 to give to the government. And that means that you're actually left with around about £83 for yourself. So you can see immediately the actual money that you're left with in your business, your sales actually decreases. So I'll move on to some hints and tips for you in a minute as to how you can actually deal with that in your business. But you can see this shift and why people are concerned about it. But actually, it isn't as bad as people think it is, and we're going to work through the reasons why just now. So the first thing that businesses tend to ask me is, how do I stay under the VAT threshold? And what they want to do is essentially stop growing their business. And the problem with that is that means that whatever your earnings are today is what your earnings will be forever. So if you're currently turning over £80,000, for example, and you're keeping maybe £30,000 or £40,000 of that in profit, then that will be your limit forever if you're not prepared to go over that VAT threshold. Now, we've all seen recently hyperinflation, so the prospect of earning £40,000 in, say, 20 or 30 years' time is not realistic. So you have no choice but to continue to grow your business. And that does mean that you've got to find a way to break through that VAT threshold. The other common mistake that businesses ask me is how they can avoid it by setting up other businesses. So there's a really infamous case that actually made it to a HMRC tribunal of a bed and breakfast, and they had approached the VAT threshold. So they decided to set up a different business. So they had two. They put one for all of the accommodation sales and one for all of the breakfast. So this meant that the two businesses stayed below the VAT threshold. And often businesses get this type of idea and they think, oh, I can just split my turnover amongst lots of different businesses and I'll fall under the VAT threshold. But in that example, that actually went to a HMRC tribunal, and HMRC looked at things such as whether they had the same website, whether they had a joint bank account, whether there was the same ownership of both businesses, so it was owned by husband and wife. They also considered, for example, the same staff worked across both businesses. So from a VAT perspective, HMRC actually said, you may be two different businesses, but we actually believe that you are one business and you've done this to avoid tax. So in most instances, it's not appropriate to keep your turnover below the VAT threshold because your earnings will be capped for the rest of your life. And secondly, most businesses can't really do much about setting up an additional company or anything like that to avoid VAT. So therefore, you've got no choice but to approach this VAT threshold and decide to smash through it. So if that's you, what can you actually do about it? Let's look at some practical steps that you can take in your business to help you with managing this transition and becoming VAT registered. So I think the first important thing to do is to point out what the net impact on you actually is in your earnings. So we had the example before of a plumber that does £100 in turnover and they need to pay £16.67 of that in VAT over to the government. So you think that the impact is approximately £17 on your business. But actually, being VAT registered means that you can now also reclaim VAT on your purchases. So say for example that £100 included some labour but also some parts at say £60. So £10 of that £60 purchase is actually VAT that you can reclaim as well. So you have to pay over £16.67, but you can reclaim £10, which means the impact is actually £6.67 in VAT. And furthermore, if you just go one more step and think that £6.67 profit, how could you get that out of the business? Well, you've got to pay tax on it in some way. For most businesses, that might be a salary that you take out of your business, or if you're self-employed, you're going to be paying tax at maybe 20 or 40%. So even best case scenario, you'd end up with about £5 in your pocket. So becoming VAT registered is actually only having an impact on the business of round about £5 for every £100. So the reason why I think it's important to explain that to you is that you have perspective of how big the problem is in your business. Now, of course, not every business will be the same, and I'm just talking very broadly here about calculations. It will depend on who you're buying your products from, whether you're buying from VAT registered businesses, service-based businesses as well, where they're not buying as many products, will be impacted differently. So let's start with having a look at pricing. So we've established that if you don't put VAT on top of your sales and increase your pricing to your customers, then your profits will go down. And a lot of business owners, their immediate reaction is to think, I can't put my prices up because I'm in a competitive situation. Especially if you are competing with businesses that may not be VAT registered, it means that your prices will be more expensive than theirs. But if that is you, then really I think you need to just take a step back and consider why your customers are buying from you. Because the most successful and profitable businesses don't compete on price. Take Amazon as a really good example of this. Amazon's one of the biggest businesses in the world, but their prices are never the cheapest. It's because they have other unique selling points or USPs, such as the delivery turnaround and the service that they offer, which means people continue to buy from them. So you really need to be considering what makes your business unique and why customers buy from you. And really, this shouldn't be based on price alone. But if you really think that you cannot put your prices up, then you do need to have a plan in your business to grow. You need to be able to smash through that VAT threshold and not just creep up over the top of it, because that will reduce the profits in your business and your take-home pay. And if you're looking for some tips on how to grow your business, make sure you subscribe to my channel and also check out my Facebook group too. So a couple of other tips that I've got for you as well around the VAT threshold. The first being a VAT scheme called the flat rate scheme. Now, it tends to be service-based businesses such as web developers or hairdressers, for example, that will benefit most from the flat rate scheme. But essentially, this means that you can pay a lower percentage of VAT over to HMRC. So it's up to you what you do with pricing, but it gives you a little bit more flexibility, because the VAT flat rate scheme means that instead of paying 20% VAT over to HMRC, there is a scale depending on the industry of your business, but sometimes the VAT rate paid to HMRC can be as low as 11%. So this gives you a little bit more flexibility around the pricing. But there are some pitfalls with it because, for example, you cannot claim VAT on your purchases. So I'd recommend getting an accountant or a bookkeeper if you're a service-based industry, because they'll be able to do some calculations and tell you whether you're better off on the flat rate scheme or the normal scheme. Now, another big impact that is often overlooked by small businesses about registering for VAT is the impact on cash flow. So when you register for VAT, your VAT return includes invoices dated in that period. And if you are offering payment terms to your customers, then this means that you could be paying VAT over to HMRC before your customer has paid you. And therefore, registering for VAT will put a strain on your cash flow. And there is a scheme called the VAT Cash Accounting Scheme that helps businesses deal with this. It means essentially that you don't have to pay the VAT to HMRC until your customer has paid the money over to you. So you can register for the cash accounting scheme at the same time that you register for VAT, and you can use the cash accounting scheme if your turnover is less than 1.35 million. So it's really appropriate if you're registering for the first time. The only thing I would say if you're going to use the cash accounting scheme is it's probably best to have a proper online accounting system such as Xero, QuickBooks, ClearBooks, something like that. It can be quite complicated to manage in spreadsheets, particularly as your transactions get bigger. So it's always my recommendation that you have an online system anyway, but if you are using a spreadsheet, you're probably going to end up in a bit of a muddle with the cash accounting scheme, because not only do you have to track the dates of the invoices, you also have to track the payment date too. So most businesses simply can't avoid registering for VAT. It's not an option to just keep your turnover below it and stay the same forever. That just simply doesn't work in today's world, particularly with the inflation that we're seeing. So my top tips are to grow your business. So you need to grow your turnover significantly, not just enough that you creep over and sit just above the VAT threshold, because that means that your profit will decrease and your earnings will decrease. You need to consider whether the flat rate VAT scheme is applicable for you, and you also need to consider using the cash accounting scheme, especially if you're offering payment terms to your customers. But often what is not spoken about are the benefits of being VAT registered. So the first one is that if you are selling to bigger customers, particularly corporate customers, they will ask you for your information such as your VAT registration. And if you're not registered for VAT, it's often a sign that you're quite a small business, and this could put off some customers from trading with you. So just by having that VAT registration, it makes your business look more sizable, and you may even win more business because of it. And the other benefit is that your administration and your financial processes need to get better. You will need to be submitting quarterly VAT returns to HMRC. So this means that you need to be on top of your bookkeeping and all of your financial administration much more regularly than most small businesses are before they're VAT registered, and they tend to deal with everything once a year at year end. So use this opportunity of regular financial information and regular financial admin to take the time to sit down and review where your business is. Even if you're just doing it quarterly, every time you submit your VAT return, you should have enough information to tell how much profit you've made per quarter, and have a look at other things such as where your turnover is and also how much gross margin you're making too. So they're really key numbers that every business should know if they want to grow, and they want to grow in a profitable way. So that's my take on the VAT threshold. Businesses should not be scared of it. They should use this as motivation to grow their business and also take advantage of the benefits that comes with it. So if you're interested in this and other videos, including how to grow your business, make sure you subscribe to my channel and check out my Facebook group too.